All right, and with that, I hand it right back over to Zoltan Vardi. Thank you very much for hosting this next exciting session. Please give a warm welcome again to our panel.
All right. Zach, if you could take a seat here next to me. All right. So good afternoon, everybody. For those of you who haven't seen me on the previous stages, my name is Zoltan Vardi. I'm a startup mentor and a founder of a business development consultancy called The Launch Code. I'm chatting today with Zach Coelius, managing partner of Coelius Capital, based in San Francisco. Zach is an early stage investor with a portfolio of 50 plus startups. He's had several notable exits, including Cruise Automation, exit of $1 billion to General Motors, not a bad return. HelloSign, which was bought by Dropbox, and Apprente, which was bought by McDonald's. We'll be asking Zach about these in a moment. He's also a four-time entrepreneur and is the co-founder and CEO of Trigit, an ad tech company where they had raised, with his co-founder, $25 million and exited in 2015. So Zach, welcome to Techsylvania.
Yeah, thanks for having me. I'm excited to be here. Thanks everyone in the audience. It's much more fun to have people to listen to us.
Absolutely. Well, you've come a long way, so I'm sure they're very interested to hear what you have to say. So Zach, I looked at your LinkedIn profile, and in that you say that you are primarily investing in software businesses, and you're happy to look at all sorts of stuff. The weirder, the better. So what is the weirdest investment opportunity that has ever been presented to you?
The weirdest investment opportunity. That's a good one. I looked at an insect farm once, which actually is really cool, right? Like you think about it, you know, insects are an incredible source of protein. And one of the big problems they have with fish farming is you have to feed fish other fish, and that destroys the ocean relatively rapidly if you just basically like are constantly taking fish from the ocean to feed your fish farms. But insects work relatively well for that. But it turns out farming insects at scale is a very difficult problem. If you want
that is not a problem I would normally think of, or I'm not sure how many people would think of that.
Yeah, so it was fun. It's one of my favorite things about my job is that I get to dive into these really weird, esoteric spaces and, you know, and learn about them very rapidly. And so I got to learn a lot about insects.
And did you make the investment?
I did not.
You passed.
No.
Okay.
It turns out it's a harder problem than even they were able to solve.
I see. Well, you know, it's funny because I saw on your list of portfolio companies, you invested in a company that I couldn't describe the name. It's a bunch of letters, but it's mushroom tea that tastes great.
Oh, got it. So this is one of my favorite companies. So I was an advisor to these two guys, and they had started a sales development rep as a service business. So they hired smart people from all over the world, and they would work for a company to send out emails and do basic sort of inside sales. Right. And it turns out that's a really hard space, and the company went under, crashed. And the designer on the team is like, fuck it, I'm going to Goa to paint. So he goes to India to paint and hang out and be in the art scene in Goa, which is amazing. And he's really into mushrooms. All the kinds of mushrooms, and
but the type you put on pizza, or the type that you eat for
all the kinds of mushrooms
experiences.
Okay. They're big supporters of the psychedelic movement as well, and so they mushroom tea is really good. It's good for you. It has all these properties that give you energy and help with your immune system, and it's really good for you. It unfortunately tastes like shit. It tastes absolutely terrible. And so he's really into mushroom tea, but we all hate it because it tastes terrible. So he starts playing around with the Indian chai tea blending techniques. So they use keiko, and they use cardamom, and they use black pepper, and things that they use for Indian chai tea. And so he comes up with a blend of tea that tastes good. And they taste good even when you're not on mushrooms. Tastes good all the time. Okay. So he comes back from Goa, and he starts sharing with his friends, and his friends were like, "Oh, this is actually good. You should sell this." So he makes a little brand for it. He puts it up on Shopify. The first month he sells like $5,000 worth of tea. The next month he sells $10,000 worth of tea. The next month he sells $20,000 worth of tea. So then they call me up. They're like, "Zach, we got this business," and I was like, I don't know shit about mushroom tea. I don't know shit about consumer. I definitely don't know shit about CPG. But like, let me help, because that's really my job is to try to be helpful. Right. So I reach out to a bunch of CPG people who I know, and I'm like, hey, can you guys look at this business? And they look at the business, and they're like, this is a good business. And I'm like, I still don't know shit about this stuff. But anyway, the next month, they sell $40,000 worth of tea. So now they reach out, and they're like, Zach, we need money because we're running out of inventory. And I was like, all right, Like, I'm gonna take a flyer. I love you guys. I'm sure I'm gonna lose this money, but part of my job is just, it's a direct-to-consumer business, 60% gross margin, subscription, growing at 100% a month. Even an idiot like me should say yes. So I say yes. So I invest in the business. This year they'll do over 100 million in sales.
Jesus.
And it's called Mudwater. So if you want to stop drinking coffee,
Mudwater, okay, yeah,
I
because
highly
it's a bunch of
recommend you
letters.
get some Mudwater.
Yeah.
It gives you energy. It tastes great, and it doesn't have any caffeine in it, or very little caffeine. And so yeah, it's just that business alone will return my fund probably. So it's amazing. And I still don't know shit about CPG or mushroom tea or But.
So that leads us to the next question, and probably this is partly an answer to the question is, what type of deals do you look for? In some of the literature I read about you, one of those is founders who you know well, which I guess falls in this category of mud tea. What other sort of deals do you look at, or what other parameters do you evaluate when making a decision?
Yeah, so I break the deals that I invest in into three sort of categories. One is people I've known well. That's easy. If you've known someone for a long time and you're like, okay, you've seen them at work, and it makes it easy to invest in people who are doing really crazy stuff. So for instance, with the Cruise, Kyle I'd known for many years, and I tried to hire him at my company. He was smart enough to always say no. And so when he started Cruise, here you go. That's easy. But the second one is the spaces where I'm actually pretty smart. So I used to be in ad tech. I spent a lot of time in data, MarTech. Over the years, I'm slowly becoming less smart in that space, but for a while, I was one of the world's experts in programmatic advertising. So I spent a little bit of time investing in those spaces. But the vast majority of my time is I spend investing in sort of the first hint of product market fit. And so what that means is, so when you first start a company, at least when I first started a company, and the entrepreneurs pitching the company, you're talking to them, and they're like, usually what they'll say is, well, we can do this, and they're kind of exploring the space. They're trying to figure out what customers will resonate with, what really can get traction, and they're going around trying to find sort of the magic. And there's a moment that I've experienced personally and that I look for is and what I like to say is, when you can cold call a customer at 9 o'clock at night on their cell phone while they're putting their kid to bed, describe what you do in one sentence, and instead of them saying, fuck you, why are you calling me, and fuck you, don't ever call me again, they say, oh yeah, I want to talk to you tomorrow. And that, we all have that, right? So when Travis started Uber, he was like, yeah, you push a button and you get a car. And I was like, oh my God, I want that. Obviously, it's amazing. And anyone who lives in San Francisco or anywhere where you don't have Uber is like, oh my God, I want that. It's the same sort of thing with, one line of code and you can add payments to your website, or a little white box. You can type in anything you want and out comes the answers. It's that magic of finding a thing that you can enunciate cleanly and clearly, and that customers are like, oh my God, I want that. Yeah. And what's interesting is that with startups, they go through this exploration space where they're trying to figure out what works, and they're trying a lot of things, and then when they find it, it's like, oh my God, that's it. And the customer's like, oh my God, I want that. And it's a magical place. And what's interesting is that as an investor, there's a point when the entrepreneur has found it, and they know it. They're like, oh yeah, that's it. And I'm like, oh yeah, that's it. And then most VC firms, they need 3 to 6 months of metrics before they're willing to basically write the big check. But the entrepreneur needs money immediately because they're like, oh my God, I got it. We got to go. We got to go. We got it. And usually they're like, we got to hire salespeople. We got to hire marketing. We got to go. And that's my job. So in that moment, when they find it, my friends who are around that company will call me up and they'll be like, Zach, we got one. And I'll talk to the entrepreneur and I'll try to figure out if it's actually real or if they're just imagining it. And then hopefully I get to write a check.
So product market fit is the holy grail, right? That's what everybody is working towards, what every entrepreneur is looking to find. Is it fair to say that product market fit evolves over time? Because I personally have experienced it also, some of the companies I work with, they think they have product fit, they have some traction, and then all of a sudden it falls off the cliff. And then they're all back to I thought we had product market fit. How do you look at that from an investment perspective?
Yeah, so it's both the easiest thing in the world and the hardest thing in the world. I'll give you an example. So in my company, we started it in 2005, and we were going into the ad tech space. Before it was really even called ad tech.
You were like ad tech before ad tech was cool.
Yeah, it wasn't even ad tech. It was just ads, internet ads. And so the first few years we pivoted and pivoted and pivoted. I mean, we pivoted 7 different times in the first few years. Like, it was like a dance. Like, we were just spinning in circles trying to figure out how to make an ad product that people wanted to buy. And we'd call up these customers, and we'd spend an hour with them on the phone, and we'd talk to them and tell them all the reasons why we were awesome and they should work with us. And they would be like, yeah, can you maybe call me in a year? And it's, but every now and then someone would be like, ooh, that's exciting, I want to try it. And then you'd go through the POC, and you'd set it up, and 6 months later, they'd be like, well, I don't know, the metrics were meh. And, we kind of slowly fought our way to $1 million in revenue that way. And it wasn't like $1 million in real revenue, it was like $1 million in revenue that was sort of there that week, and then like somebody would churn, and then we'd get somebody else, and like, we thought we had product market fit, but like the real product market fit was when, right before Facebook went public, they missed their Q4 earnings. And their ad platform at that point in time was garbage. They'd poorly built it, and they didn't really know what they were doing. And thankfully, I was lucky enough to be friends with the Facebook ads team, because back then it was like 15 people. And I was like, guys, if you let us do retargeting on your platform, we'll give you a lot of money, because it will work really well. But the team had said no for years. And so they went, right when after they missed their earnings, they went to Zuck, and Zuck was like, I don't care what you do, we need revenue to hit immediately. And so they turned on retargeting, and they let us be one of the platform providers. And so suddenly, in the space of 12 months, we went from fighting for $1 million in revenue to generating $30 million in revenue run rate in 12 months. So from $1 million to $30 million in 12 months. And what happened is that like we would set up a call with Booking.com, biggest global digital advertiser in the world. They spend $1 billion a year on global advertising. They are literally the smartest people in the world about digital advertising. Set up a call with them, we get on the phone, and they're like, we thought we were going to be talking to some junior guy, and the CMO is on the line. And we're like, what the fuck is the CMO doing on the line with, like, who the fuck? I mean, we're like a little baby startup. And like literally no one talks except for him. He's like, you can do retargeting on Facebook. And we were like, yes. He's like, I want to start tomorrow. End of call. And it was like, holy shit. Like, and that happened over and over and over. It was like Booking and Walmart and Best Buy and Home. I mean, all these big advertisers started working with us. And now that I've felt that feeling, and now in the startups that I work with, like Mudwater, like literally, they just couldn't keep up with the growth. And like when you find real product market fit, what you find happens is that all the ands, they fall away. It's no longer like we do this and. It's like we do this and we can't even do this. We can't even keep up. And like, oh yeah, you're a customer, but you're an annoying customer. You're fired. We don't want you anymore. Oh, you're like our provider and you don't answer the phone 24 hours a day. You're fired because you need to keep up. And so like generally the secret to startups is that like the way I like to think about it is like it's the delta, so the spread between what is there and what you have and how big that spread is. And when you find a huge spread, you find that 10x, sort of you're 10x better, or you can push a button and get a car and the alternative is a taxi. Everybody wants it. And because of the way the internet works, everybody in the world wants what you have. Yeah. And so suddenly you find this incredible growth. Yeah. And now that I've been through that, looking back at my years as an entrepreneur, I'm never again and ever again gonna fight my way to like shitty product market fit. I'm gonna iterate my way to finding that, because that's in all the companies I work with now. When you find that, it's just like woo.
Right. So it is a matter of focus, right? It's like ultimately finding that unique focus, that fit, that is gonna make you scale. You disagree?
Yeah. The art and the science of our business is you have to basically, and I think of everything in life as sort of a yin and a yang. They're literally diametrically opposed forces. And in startups, there's focus, which is incredibly important, and without it, you're fucked. But at the same time, you have to have the capacity to look at what you're doing and say, this shit ain't working. And we have to change, and we have to basically like do something different. And like,
so to me, that's focus meets agility, right? So you got the focus, you're clear on your path, but you're agile enough to make adjustments along the way to find that product market fit.
Exactly. So like, for instance, right now I'm reading this book about the founding of TikTok. It's called The Attention Factory. And it's great because it's like this extraordinary story of ByteDance's attempt to basically build a new app. And they rolled out the first version of it, and it sucked. And instead of basically like turning it off, they kept going and kept working on the problem, and they like eventually it became TikTok. And that balance between turning it off and starting a new iteration and a new test versus doing the work to figure out how to improve what you have. I mean, Cruise is a perfect example of this. Like when we invested in Cruise, the promise of self-driving cars was immense, but it's going to be 10 years before they probably get the first dollar in 10 years from the starting of the company until they get the first dollar of income into the business. It's just, and so the balance between iteration and work is very hard.
Isn't that also what makes the whole startup investing game so difficult to grab, right? I mean, how do you actually define the value of a company that doesn't generate $1 of revenue until 10 years from now? Obviously, somebody did because they bought it for $1 billion, but being honest, what is that? I mean, what's the value there? It's a promise.
My favorite thing about my job is that nobody, including me, actually knows shit about it. Right? I mean, it's the weirdest job in the world because you literally are wandering around all over the world, meeting random ass people, waiting for someone to be like, oh, here's billions and billions and billions of dollars that will emerge out of this magic imaginary hole in the sky. And I'm imagining it, and it will happen. But the interesting thing is it keeps happening over and over and over and over again. And so at some point, you have to just sort of like willingly accept the fact that there are magic holes in the sky that just generate immense wealth. But no one really knows how to do it. Even the best, it's funny, so I was at one of my friend's birthday parties a few weeks ago, and I was playing poker with Bill Gurley, one of the most famous investors in the world. So the guy who basically funded Uber very early on. I mean, the guy's a genius, right? And somebody at the table was asking Bill about his Uber investment, and everyone, I think, was expecting Bill to, do a standard Bill, here's all the ways that this thing happened, blah, 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 blah. And then he was like, yeah, sometimes you just feel it. When Bill Gurley says that, you just accept the fact that sometimes you just feel that there's magic there, and then you do a lot of hoping.
So as an entrepreneur, as a passionate entrepreneur, in fact, I think you refer to yourself at the core as an entrepreneur, how does that affect your decisions as an investor? Versus somebody who's a financial guy and basically sits on a VC board.
I mean, I think it comes back to the yin and the yang. Like there's magic. Startups are all about magic. And it's about the magic of the team. It's the magic of an idea, of a concept, of an ethos, of a vision. And without that magic, they never can grow as big as they need to grow to make it make sense from an investment perspective. But then there's also just basic standard execution. And the good thing about my business and any VC's business is you get a lot of pattern recognition. You get to look at a lot of companies. You get to watch them execute and fail. You get to see them execute and succeed. You get to see that over and over and over again. And then at some point, you can build a practice against that. You can say, okay, this is what a successful company continually looks like from an execution perspective. And then this is what a successful company looks like from a magic perspective, which is impossibly hard to describe, but it's incredibly important in the process.
You have over 50 investments. Any investments in European companies?
Sure, yeah. So I'll give you a good example of the magic. When I first started doing this, I was running an AngelList syndicate. And the way that works is you find an investment, you write a little memo, you put it up on AngelList, and then random people all over the world will invest in the deal, and then you get carry on that investment. No fees. So for the first few years, I had no income at all. And I used to work for McKinsey as like an external advisor for a little while to pay the bills. And so the way that would work is they would call me up. They'd be like, Zach, do you want to come to Warsaw for the weekend and do this project with us, and we'll pay you a lot of money? And I was like, fuck yeah. Yeah, that's a good deal. I'll do that. So we had this project in Warsaw, and we finished the project, and the whole team, we go out drinking. And this is back when I was heavily drinking. And we have more Polish vodka than I've ever will consume again in my life. So I'm well drunk. The next morning, they were like, hey, Zach, we scheduled a breakfast meeting for you. I was like, fuck you. You're not my friends anymore. But so I go down to the breakfast meeting, and I'm still drunk. And I sit down with this entrepreneur, Stefan, and I'm literally drunk, like literally. And he starts talking about his company, and literally like 3 minutes into it, I was like, oh my God, this is the best entrepreneur I've ever met. And this is magic. Like you just feel it and see it. So the company was called Booksy, Booksy's now probably it is the biggest scheduling app for hairdressers and nail salons and beauty services in the world. And it's well on its way to being a unicorn. I'm sure it will be soon enough. And Stefan is still the best entrepreneur I've ever worked with, and the easiest investment I ever made. I didn't look at his numbers. I didn't look at his projections. I didn't look at his code. I didn't look at his team. I didn't look at anything. I was just like, I'm investing in this guy, and it's been amazing.
So what you just described, you could call a relatively high-risk strategy, right? Because you are fundamentally making off-the-cuff decisions based on the magic. How do you manage that risk across your portfolio, across your investment strategy?
So there's two answers to this question. There's the answer I tell my LPs, and then there's the truth.
Which would you like to share with us today?
I'll give you both. So the answer you give your LPs to this is, well, we have a portfolio, and we have portfolio construction, and risk-adjusted across a large number of bets. Some of them will be successful, and some of them won't, blah, 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 blah. And here's the graph, and here's the chart, and that's all bullshit, and everybody knows it. The fact of the matter is that, all of the things that make money in venture, by definition, are almost always new. And things that are new, you can't really do portfolio construction against because they're so disparate. They're just so all over the place that I think modern portfolio construction is just a whole bunch of hogwash. I think portfolio construction in venture is largely bullshit. The secret is that you have to basically hope. You have faith and you hope, and you just hope that your portfolio doesn't get fucked. And it's crazy. So across those 60 investments, pre-seed and seed investments over the last 8 years, we've only had one bankruptcy so far. And so I look at that and I'm like, well, I must be doing something right, or not. I don't even know. So for now, until I'm done doing this, I'm just going to keep hoping and praying. And
so
hoping.
It's fair to say, though, that to manage the risk, you do have to have a distribution of capital across enough deals so that you can manage that risk, right? So making one angel investment or two angel investments is probably not a good strategy.
Yeah. I mean, you don't want to go and just put all your money in one bet and hope. At the end of the day, this is a business of one investment can make you thousands of times your money, and on average, 30 to 40% of your investments will go to zero. And so you don't want to be a complete idiot and put everything into one bet and hope. But on the other hand, I largely think that VC portfolio construction, as its practice as a professional craft, is largely BS.
Okay. So one of the things I mentioned to you in our little chat a couple hours ago is that it's striking to me how transparent you are in your investment strategy. If you go on to Zach's LinkedIn file, you'll actually get a link to all of his investments, when he invested. I don't think there's any investment amounts, but there's a whole table on returns and IRRs, complete transparency, and I'm assuming, of course, the numbers are true, and the numbers are great. Is that sort of radical transparency, how has that impacted your work as an investor and the way that people perceive you or work with you?
Yeah, I mean, I think so one of the things that I learned as an entrepreneur is that differentiation is key. So in life, both as an entrepreneur and then now as an investor, I constantly need to look around at sort of what everyone else is doing and identify the things that I think in VC in particular are largely tribal, which means that there are things that everybody believes and does, but there's really no good reason for it. And in venture, for whatever reason, there's this incredible need for secrecy. I still can't figure out why. It doesn't make any sense to me, and maybe I'm just stupid. It's possible. I mean, but I look at that and I'm like, I don't understand why everyone is so secretive about this. And by being not secretive, I'm able to differentiate. And so when people look at me, they're like, oh, well, this guy's sharing shit. He must be doing something right. And so I'm constantly looking for those opportunities to differentiate through attacking that bits of tribal knowledge that constantly permeate these businesses. It's also something I look for in entrepreneurs. The entrepreneurs who come to me and do everything that's in the playbook, it's yeah, that's cool, but that's not usually what I look for, because it's the people who say, oh, that playbook, but here's all the ways that it's totally wrong, and here's how the right way to do it is, that use first principles in their thinking. Those tend to be the ones that break through in my experience. So that's what I do.
So another thing you're quite transparent about is how to engage with you.
Sure.
I think to quote you on your LinkedIn profile, it said, because I tend to be quite a bit of a mess to engage with, I wrote a user manual, which I thought was quite unusual. You can, again, find it on your LinkedIn profile. Tell me about the history of the user manual and how people have reacted to that in their engagement with you.
Yeah. So on my Twitter and then on my LinkedIn, you can find it. I tend to be relatively, what's the right word here? I'm weird about the way I like to interact, like for instance, in many different ways. And after like the 100th time of trying to explain it, I was just like, fuck it, I'm just gonna write it. And so I wrote it and then I put it in the bottom of my emails, and it's amazing how well it's worked. Like a large number of people have been, have given me a lot of good feedback on it. We've iterated. If anyone has good ideas, please feel free to send them my way. But yeah, it's like I don't do coffee meetings. That's unusual in my business. Every VC loves to have coffee with other VCs. I refuse to fucking do that. I don't meet with founders until you send me a deck first. And like, some people are like, no, I don't want to meet with you. That I'm like, fine, don't meet with me. And it's just like a list of things that I do. And I wish everyone had one, because it's like, you know, I hate IM, I hate texts. I want to get everything over email, which is very boomer of me, but like, it's just my style. But yeah, it's worked out really, really well. So.
Okay, so that's an interesting piece of advice maybe somebody can think about in their own business. So we're coming down to our final minute. Give these folks in the audience your top 3 tips for how to build a globally successful company, having invested in so many. If you had to like narrow it down to the essence for entrepreneurs, like what are the 3 things they need to have in place?
Wow, that's hard. I mean, at the end of the day, what I look for, and it's not necessarily the right answer. Like there are other answers, and my answers are just what I look for. But like, I look for things that are truly new, like absolutely, totally new. So if you're a better version of X, just not my jam. I look for things that are really different in the way they approach it. So like a lot of people they really want to like kind of do the same thing that everyone else does. I look for things that are very highly differentiated. And I think one of the things that I've seen is very successful, especially in startups in other geographies, is identifying problems that are unique to your market as opposed to global markets. I think a lot of founders are afraid to do that because they're like, hey, my market's too small. But oftentimes, and I've seen that these founders who look at things that are unique to their market can then figure out how to build something that's very differentiated and then take it into other markets in a really interesting way. So, yeah, I think it's fun.
All right. Well, we're right on time. So
Awesome.
Thank you very much, Zach, for the conversation. I hope the audience has gleaned some interesting insights. And thank you very much for traveling all the way here to talk with us today.
Thanks for having me.
Thank
And I think
you.
we're doing a Q&A after this.
Yeah,
so
in fact, you're right. There is a Q&A in the Q&A upstairs. So you can continue the conversation with Zach there. So thank you very much.
Thank
you. Awesome.
Thank you so much, Zach. Great job, Zoltan. Thank you so much for doing 3 sessions today. Big round of applause for Zoltan as well. Thank you so much, folks.